Have you been strongly considering purchasing a motor vehicle through your company and wondering whether there is any kind of tax benefit to doing so? Well, in this video, we're going to try and get to the bottom of that question. So what I'm going to do is I'm going to compare a couple of different scenarios. I'm going to compare a situation where you have bought a vehicle personally yourself versus through the company, and also for different types of vehicles, whether it is a private petrol or diesel car, whether it is an electric car, or whether it is a commercial van. And at the end, hopefully you'll have a clear picture of when it is a good idea and when it's not really of much benefit to purchase a car through your company. But in the first half of the video, I'm going to go through some of the general tax rules that apply to kind of buying a car through a company in terms of the likes of VAT, capital allowances, and benefit in kind. If you're already kind of au fait with all of those rules, you can skip ahead to the scenario analysis, which we will do in the second half of the video. I will leave a timestamp down below. So the first important concept that you need to understand when you purchase a car through your company is benefit in kind. So a benefit in kind is a non-cash benefit that you receive as an employee from your employer. So even if you're a director of your own company, you're an employee. And if you receive a non-cash benefit, that needs to be taxed essentially as well. So what we do is we need to work out a notional amount. So we need to work out exactly the value of that benefit. That value then is added onto your payroll whenever your payroll is done, either on a weekly or monthly basis, and spread out across the year. And then you're going to be taxed on that value that you have received. So it is treated like a normal wage or a salary paid to you and taxed the very same way you'll pay your income tax, your PRSI and your USC on the value that you receive. Now, how do you actually go about calculating the value that you received if you are using, say, a company car for both personal and business mileage? We're going to go through kind of all the different rules that apply here now first. The first step in doing that is you need to know the value of the car that will be used in the calculation. So what they use here for revenue purposes is the original market value, the OMV. So what that is the original listing price essentially when it was first registered as a car in Ireland. And you need to add on top of that any VAT, VRT and duties that apply to that vehicle as well. So it's the total real cost, including taxes, when the car was first registered. So the important asterisk here is even if you are buying a second-hand car through your company, the value that you use, the original market value, still needs to go back to when the car was first registered in Ireland, not the second-hand value. So you need to work out the original listing price. Say, for example, if you bought a 2016 car through your company in this year in 2024, you still need to go back to the value that it was back in 2016 plus the VAT and VRT and duties. Once you're happy that you have your original market value applied, then there are some reductions that can be applied to this value depending on the year and the type of vehicle. If it is an electric vehicle, as you can see here, there are some quite good reductions in place at the moment, but as you can see over the next couple of years they are being phased out. I'm making this video just a couple of days before the latest budget, so hopefully there'll be some favourable changes to these, but I haven't heard any mention of it quite yet in the news leading up to the budget, so we can kind of assume that they're kind of probably going to stay the same. So as we can see here, for an electric vehicle in 2024, you can take your OMV, deduct off €35,000 and another €10,000 as another temporary reduction. So your total reduction in 2024 is €45,000 off the OMV for an electric car. For petrol or diesel, it's just €10,000. And as you can see, this total reduction then is kind of reducing year on year. So they are our first two steps. We get our OMV, we apply any temporary reductions that are applicable at the moment. Then we need to work out what the CO2 emissions of the vehicle are, so what category it falls into. So generally speaking, the more kind of a fuel efficient or the lower CO2 emissions, the less tax you're going to pay. So you want to be up here in the A, B or C region, or else you're going to be paying a lot of tax when you're looking down at the D's and E's and further. Because based on this category and the business mileage that you do, you then select a percentage. So on the top of this table here, we have the vehicle categories that we just saw, A, B, C, D, and E. And on the left hand side, it shows the business mileage that you do. So the more business mileage that you do, the less tax you're going to pay. The less business mileage you do, the more tax you're going to pay. So the percentage used to calculate your benefit in kind is much lower if you're doing, say, over 50,000 kilometers business mileage a year, and you're using an A-rated vehicle. It's 9%. But if you're using, for example, a really bad energy rating kind of car, and you're only doing a small bit of business mileage, say less than 26k, then that increases all the way up as far as 37.5%. So that's a huge difference between someone doing a small bit of mileage versus a lot, and the CO2 emissions of the car. So here is just a very, very basic example there given by revenue. So this employee was using a vehicle with an OMV of 30k. The CO2 emissions were 105 and the annual business travel was 22k. In 2023, the employee did not make any contributions towards the car's running expenses. So basically, if you do contribute towards the running of the car, that cost that you have outlaid can also be offset against the benefit in kind. But in this case, this employee has made no contributions. The table says they have to use a rate of 30%. So you take your 30% and multiply it by the OMV less the reduction amount, which is €10,000. So you're getting €20,000 multiplied by 30%. So they get a benefit in kind of €6,000. So this will be then added to their payroll. So it'll work out as €500 a month added onto their payroll, and they're going to pay tax on that extra €500. So what they will essentially see now on their payslip is that their net pay will be reducing because the taxes have now increased, because they're now paying tax every month on an extra €500 that they're not actually kind of receiving any cash value for. So the next important tax heading to consider is VAT. If you bought a car personally, obviously you're not going to be able to reclaim any of the VAT because you're not a VAT registered business. However, even if you are a business that is VAT registered, there are only limited circumstances where you can claim back a portion of the VAT. If you had bought, say, a private car through your company, so your likes of your private electric, petrol or diesels cars, then you don't get to reclaim any VAT, even if you're a business or a company or whatever as well. The only situation where you can reclaim a portion of your VAT is if you're buying, say, a commercial vehicle like a van. Then you'll be able to claim back a certain percentage of it, and the portion that you can claim back will be based on the business versus personal use. So for example, if it was 50-50, then you can claim back 50% of the VAT in that situation. There is another situation then when a further reduction can be applied to your benefit in kind, and this applies as well to employees with low business kilometers. So if you're doing less than 24k, then the cash equivalent value that you work out, so your OMV less your deductions, may be further reduced by another 20% in this following situation, where you as an employee work at least 20 hours per week. You need to travel at least 8,000 business kilometers annually and spend 70% of your working time away from the employer's premises. So that might be kind of a hard one there to kind of qualify for. 70% is quite a lot of time to be away from your business premises. And you have to retain a log book with all the details of the business kilometers and the work purposes for all of the trips. So there's quite a lot in that to actually qualify for that kind of a additional kind of relief. And here is just some further detail on the types of vehicles which you cannot claim back any VAT for. So you might be wondering, for the commercial vehicle, would the likes of, say, a Jeep or an SUV or something like that qualify for allowing you to reclaim VAT? But basically any vehicles that are falling into category A for VRT purposes, which are saloons, estates, hatchbacks, convertibles, coupes, MPVs, Jeeps and SUVs, minibuses and motorcycles, none of those you can claim back VAT on. It's only categories, I think, B and C for VRT purposes that you can reclaim VAT on them. The next tax that comes into play then when you're comparing purchasing a car for yourself personally versus through a company is capital allowances. So based on the energy rating or the emission levels of your car, you can claim back some capital allowances. up to a maximum of €24,000. So how capital allowances work are they are taken off your taxable profits. So for example, in the current year, if you had taxable profits of €50,000 and you had purchased a company vehicle and it was a petrol, for example, then you'd get this €24,000 spread out over 8 years. So your taxable profits would be reduced by €3,000, which is 24 divided by the 8 years. So you get €3,000 in the current year. So your 50,000 taxable profit will be reduced to 47,000, and you'll be taxed on the 47,000. So it helps to reduce your tax overall. The good thing for electric vehicles is you might be able to reclaim the whole 24,000 capital allowances in the first year rather than spreading it out over 8 years. That's the only real difference between the petrol and diesel and the electric. And as you can see, the worse your carbon emissions are, say D's and E's, they get their kind of capital allowances cut to 12,000, and F's and G's get no allowance whatsoever. So that's another thing that we're going to include in our calculation later on. Now it's time that we actually go through an example. Let's compare all of the different scenarios, and here are the assumptions that we're going to make. So I'm going to look at it from the point of view of a person who's already on a salary of €80,000. Say you're a director of the company taking an €80,000 salary from your company. The average tax that you're going to roughly pay on €80,000 is 32% overall. The category of car that we're going to purchase is a category B. The business mileage that we do is actually not very much. It's less than 26,000 kilometers per year. The cost of the car that we want to buy is €40,000 excluding VAT. And when we add in the VAT on top of that, it comes to 49,200. We're going to assume the VRT and everything like that is already included in the price as well. So our total cost there is 49,200. And the annual ongoing maintenance and insurance or whatever is going to cost, say, €3,000 per year. So they are assumptions we're going to use throughout this example. So the very first thing that we need to acknowledge here is that the real cost of purchasing the car to us personally is much higher than 49,200. That's because we're paying for this car out of income that we've already been taxed on. So you've already made this money in the company, you've had to pay yourself a salary, pay a lot of tax on that salary, the 32% overall on average on that 80k salary, and then you go ahead and pay for that car out of your post-tax income. So in reality, if I gross up that income back up to the pre-tax amount, it's actually really costing us €72,353 if we are purchasing the car personally. So I've taken the 49,200 and grossed it up to the kind of gross amount before the tax was taken off. So that's quite a hefty amount, obviously. And for this example, we're going to compare the cost over the space of 5 years in total, just to make things kind of easier to compare. So we're going to say 5 years of €3,000 per year. We're also going to need to gross up that cost because that €3,000 every year is coming out as well of our post-tax income. So when we gross up that over 5 years, that's another €22,000. So the real cost to us of purchasing this car personally is €94,412 over the space of 5 years. Okay, so that's our first example. Now let's compare it doing it through a company. So if I was purchasing a petrol or diesel car through my company, so the original cost including the VAT is 49,200. As I was saying, for a private car that's petrol or diesel, I can't claim back any VAT on it whatsoever. I do get a deduction for capital allowances, which is going to save me some tax in my company. However, I'm going to have to pay tax on a benefit in kind amount over the next 5 years because I get the value of using this car that the company has given to me. So over the space of 5 years, it is going to cost me €32,214 in additional tax that I'm going to have to pay over the space of 5 years. So here's my calculation here. So I take my €49,200 in 2024, I can deduct off €10,000 from that value. I multiply that then by the 26.25%. That's based on the CO2 emissions that percentage and the business mileage, which is less than 26k, which we assumed, then we come to a benefit in kind for that year of €10,290, and then we add that onto our payroll, and that will roughly come out to 52% of that then will be roughly taxed. So we're coming to €5,351 in 2024, and so on. This gets higher then in the next couple of years because this €10,000 deduction ends in 2024 as well off the cash equivalent value of the car. So overall, that's how we come to the tax cost there for the BIK over 5 years, which is 32,000. Also, we have the annual cost of the maintenance of the car. This will actually help us reduce the tax as well in the company. So there's a tax saving of 12.5% on this amount. So the tax cost there, so the actual real cost to us there in that situation is 13,125, and then the overall cost when we add everything together there, it comes to 92,664, which is only very slightly cheaper than if we had purchased it personally ourselves. So we're only talking about less than €2,000 of a saving there. So it doesn't really make a whole pile of sense there in that situation where you're not doing a whole pile of business mileage, and where your car is not the most energy efficient in terms of CO2, you end up paying a bit more because the BIK tax there is quite significant. In the next example here, we're looking at the electric car. So the overall cost is the same because we cannot claim back any of the VAT. So the cost is 49,200. We get capital allowances saving there of 3,000 because we can claim back all of it in the first year. Whereas for the petrol or diesel car, it was over 8 years, so we've only kind of included 5 years of the capital allowances there in the last scenario. So it's only 1,875 versus 3,000 of a saving here. In this example for the electric car, the benefit in kind, as you notice here, is 17,000 versus 32,000 for the petrol or diesel. That's because the cash equivalent value is much lower because of the reductions are much bigger at the moment for electric vehicles. But as you can see, these reductions are being phased out, as we mentioned earlier on. There's huge reductions right now, €45,000 for 2024, 35,000 for 2025, and then it goes lower and lower, and it's essentially phased out over time down to about €10,000. So as you can see here, the tax that you pay on your benefit in kind is going to start increasing on electric cars into the future. Here at the moment for this year and next year, it's quite good, but the cost is increasing. So the benefit of buying an electric car is really in the here and now for the next year or two, but it's going to get more and more expensive unless something changes in the following budget. So the real cost then overall is coming to 76,524. The total cost over 5 years would be €15,000, but it will save us about 12.5% of that on tax. So that's how we're coming to those figures. So overall at the moment, the electric car is coming in a lot cheaper than the petrol or diesel. It's 76,500 versus 92,600. So that's quite a big difference there. If you're considering purchasing a company car, electric definitely is cheaper at the moment. Now let's have a look at a commercial van rather than a private motor vehicle. There is a couple of extra tax benefits that we get from purchasing a commercial van. That's obviously because, I suppose, revenue look at it as an actual vehicle that's really used in your trade compared to a private motor vehicle, which is probably not as important for your trade, where a commercial van is important for transferring goods from A to B, etc. for your business. So that's why it's more favourable in revenue's eyes to give better tax treatment for commercial vans. The overall cost here we're saying is 49,200, the same, but we're going to be able to reclaim, say, 50% of that VAT through our next VAT return if we're VAT registered, because we're going to assume that, say, 50% of the use is business and 50% is personal. So we'll get a VAT refund there of €4,600. The capital allowances are also much more favourable. For say a private motor vehicle, it's capped at €24,000, but for a commercial van, you get capital allowances on the full VAT exclusive amount, which would be €40,000 over 8 years. So over 5 years, we get a tax saving there of €3,484, so which is pretty good. Then the benefit in kind, as you'll see here as well, the tax that we're paying on the benefit in kind is much lower than even the electric vehicle. So you'll see here for the electric vehicle we were paying 17,000. For the van we're only paying just under €10,000. That's because how the benefit in kind is calculated. It's at a much lower percentage. For a commercial van, it's 8% of the cash equivalent value. So the cash equivalent value is the same here as it was for the petrol and diesel car earlier on, but instead of multiplying it by the 26.25%, which we did earlier on for that example, we only multiplied by 8% there to work out the BIK for the van. So then overall our tax is much lower on the BIK then, because it's on a lower amount. So it's only, just under 10k. And then our annual, say, ongoing maintenance, that's working out the same as the previous example. So our real cost of purchasing the van then is 64,000. So over the space of 5 years. So that was just a really high level example to get you thinking about all of the different factors that come into play when you need to consider whether it's a good idea to purchase a car personally or versus through your business or your company. Overall, in this scenario, the van was obviously much the cheaper option. The electric vehicle was much cheaper than the petrol or diesel car, but that is only really temporarily going to be that way. The longer you leave it, the closer these two amounts are going to get in the future by the looks of it, unless things change in the next budget. If you have any questions, feel free to shoot me a comment down below.